It is now my pleasure to introduce the next session. So we were going to head into now digital assets and illicit finance, separating myth from reality. I've been looking forward to this, and I'm pleased to welcome to the stage Kim Donovan, Director of the Economic Statecraft Initiative. Kim, the floor is yours.
Good morning, everyone. Thank you for joining our discussion today on digital assets and illicit finance, separating myth from reality. I'm Kim Donovan. I'm the Director of the Economic Statecraft Initiative within the GeoEconomics Center at the Atlantic Council. Our goal today is to clarify how illicit actors, including terrorist organizations, use digital assets to raise and move funds, and what the US government and industry are doing to address AMLCFT in the digital asset ecosystem. I'm very excited to be speaking with three of my former Treasury colleagues on these issues, and I'd like to introduce Lesley Chavkin, Head of Global Policy at the Stellar Development Foundation, which is a nonprofit organization with the mission to create equitable access to the global financial system through blockchain technology. Redbord, Global Head of Policy and Government Affairs at TRM Labs, which is a blockchain intelligence company, and Dara, Head of the Research and Analysis Division at FinCEN, which is the Financial Crimes Enforcement Network and the Financial Intelligence Unit for the United States. So I want to dive right in well, first of all, thank you all for being here. And now I want to dive right in. Because following the October 7th terrorist attacks in Israel, media outlets published a series of reports indicating that Hamas raised millions of dollars worth of assets using cryptocurrency. These reports renewed congressional calls for greater scrutiny over digital asset space and concern that crypto is being used by illicit actors to evade sanctions and hide their financial activity. So, I'd like to start with you, because from your experience in blockchain analytics, what is the extent of Hamas's use of cryptocurrency, and do you see this as consistent with other illicit actors?
Sure. Yeah, you were serious when you said we're diving right in.
I know.
Look, I think it is really important to sort of separate the myth from the reality, and the reality is usually somewhere in between, different views on these topics. Crypto is a really small piece of a much larger terror financing puzzle when it comes to Hamas, and that's true of Hezbollah, ISIS, Al-Qaeda, and other terrorist organizations. Look, we're talking about at least 100 million or more a year from places like Iran. We're seeing, taxation. We're seeing investment portfolios, donations from individuals, really across the world. None of that is in cryptocurrency today necessarily. So in terms of crypto, there is certainly, Hamas has been an early adopter of crypto. We saw even going back to around 2019, Hamas started to raise funds in Bitcoin, first on Telegram channels and then through website infrastructure. Basically, send your donation here and raise some funds that way. But we very, very quickly saw the U.S. Department of Justice and Israeli authorities seize about 150 wallet addresses in 2020 associated with Hamas. And ultimately, we were able to actually take control of that website infrastructure because, as we'll talk about in a moment, sort of those native qualities of blockchains that allow for traceability. So in terms of sort of, October 7th and post-October 7th, we've seen some minor fundraising in crypto from what I would sort of characterize as supporters of Hamas. We have not seen fundraising from official Hamas channels in crypto. And some of that goes back to April 2023. Hamas actually announced that they were no longer raising funds in cryptocurrency. Now, do you agree? Do you take the word of a designated terrorist organization? I certainly don't. But I think it is true that that's what we're essentially seeing. And that at least Hamas said at that time that it's because of the targeting by U.S. authorities, by Israeli authorities, of their supporters that they are not going to raise funds in crypto anymore. So we've seen in the tens of thousands, 10, 20, 30,000 raised by supporters in cryptocurrency since the start of the war. Very, very different in May 2021 when there was violence in Gaza. We saw a significant uptick immediately in crypto fundraising to the extent of about $400,000. We've not seen that since October 7th, and I credit US and Israeli authorities for essentially any time fundraising pops up in crypto today, we see it almost immediately go down, and I think that's some successful law enforcement action.
That's a fantastic point, and thank you for clarifying, because I think the media keeps publishing more and more that this is a massive issue. And Dara, I know FinCEN recently published an advisory on terrorist financing. I was wondering if you could discuss some of the methodologies that were identified in that advisory and what FinCEN is really seeing in this space.
Sure, thanks so much, Kim. So yeah, so in terms of financing terrorism, cryptocurrencies, they're really just one avenue that terrorist organizations use to raise funds through fundraising campaigns and crowdfunding. What we've observed is trends overall. The trends in TTPs, trends, tactics, patterns are consistent for Hamas, Hezbollah, and ISIS. And we've recently seen the use of stable coins in Tron because such blockchains that are relatively less expensive, inexpensive. Fortunately for now, the terrorists are not our most sophisticated actors of cryptocurrencies. That enables us to more easily track and thwart them in this space. And the amounts are typically low dollar, as Ari was saying, but terrorism is relatively inexpensive. In terms of red flags, we did publish that advisory in October of this year, and I'd really like to direct folks to some of the red flags that we mentioned in that. Among them is that a customer that conducts transactions with known or suspected virtual currency addresses tied to terrorism or terrorist financing donation campaigns. Another red flag that we noted in that October alert is the charitable organization or nonprofit organization, which we call NPOs, solicit donations that do not appear to provide any charitable services as you might expect a charitable organization to provide, or they openly express support for Hamas's terrorist activities or operations. In some cases, these organizations may speak and post on social media platforms or via encrypted messaging apps to solicit donations, including virtual currencies. And that's just a snippet of some of the red flags that we put forward in that alert, and we'd really like to encourage folks to go to fincen.gov to look at that alert to see more.
Great, thank you. No, it's really important, and I'm excited that FinCEN's been able to publish these different alerts and financial trend analysis based on the information that you're seeing. I have a question for the whole group. Just because I know we've talked a lot about Hamas, because it's been in the news recently, but I'm just wondering from your perspectives, to what extent are illicit actors using digital assets? So even going beyond terrorist groups, and are you seeing a specific type of illicit actors using digital assets? Is there an uptick in this activity?
Yeah, look, I'll sort of jump at it. We put out, TRM put out an illicit ecosystem report this year that sort of went through the different categories. And really what we're seeing is a growing crypto ecosystem, right? As more lawful users engage with new blockchains and new assets, illicit actors, opportunists, essentially follow. Literally in 2016, all of activity, probably lawful, certainly illicit, was all in Bitcoin, on the Bitcoin blockchain. Today, we've seen a complete reverse in that. Dara mentioned the use of the Tron blockchain. 92% of terror financing today occurs on the Tron blockchain, mostly in the stablecoin Tether. So we're seeing this sort of growing ecosystem, but we're seeing a whole array of different illicit actors. We saw about 9.4 billion in scams and fraud last year. We're seeing North Korea continue to attack the crypto ecosystem at unprecedented speed and scale. You know, at 600 million, at a time. We've seen over 2 billion in the last 5 years stolen directly from bridges and DeFi protocols. Terror financing is a much, much smaller piece than the sort of DPRK piece here, but still we're starting to see illicit actors. And as that crypto ecosystem grows, as we're all predicting, we're moving to a world where we use digital money, illicit actors will also sort of move there. But I always go back to the technology because the native qualities of public blockchains, right, transparent, traceable, immutable, allow for us to track and trace the flow of funds, to have visibility on this new ecosystem in ways that we never could in fiat currency, right? Networks of hawalas and shell companies and high value art and real estate. So I think that it's that balancing, and right now we're seeing a lot of law enforcement success tracking and tracing those funds as well.
Yeah, and I'd say that cryptocurrencies can be abused just as any financial instrument, and money laundering, it's not to be too cliche, but it's like water, it'll find a way. So we see illicit actors across the illicit activity ecosystem using it, whether it's drug trafficking organizations, those committing fraud or fraudsters or cyber criminals.
And I would make 2 points here. One is that I think there is precedent for bad actors being sort of first movers when it comes to novel technologies. So digital assets are nothing unique in that respect. And you can look at something over the past 20 years, things like file sharing or encrypted messaging. You see bad actors in the early days getting uptake there. Can look at encrypted messaging. When I was in the US government, that was a platform where I thought, this is only used by terrorists, right? And now in 2023, that's how the PTO at my daughter's school uses to communicate and organize events, right? So we see these technologies evolve, and I think, again, this is nothing that shouldn't be expected. The other point I would make sort of on the kind of illicit activity within the blockchain space, Treasury has been very upfront both in its action plan last year and in its DeFi illicit finance risk assessment that when it comes to money laundering, terrorist financing, proliferation financing, most of that is still happening in the traditional space, in the fiat space. And this is an important time, I think, to have a conversation about guardrails in the digital assets industry, but it's an important point to keep in mind that the traditional financial sector is still where a lot of this activity is happening.
That's a good point. Dara, do you want to jump in on that?
Oh, sure, on traditional use of course, yeah. So definitely, we see terrorist financiers, they use trade-based money laundering, they use investment portfolios, they use cash, as well as the traditional financial system. When a terrorist group controls territory, as they sometimes do, they can receive quite a deal of money either through taxation or kidnap for ransom. Just to think about as a barometer, on October 18th, OFAC issued a series of actions targeting Hamas, and they listed the investment portfolio as well as a cryptocurrency entity. And if you look at that action, you could almost use it as a barometer of how much money they associated with that investment portfolio and how much money they listed associated with the cryptocurrency action, part of the action.
One thing that's important to think about sort of in the Treasury context, given that all of our background and Dara's current role, is that I think what we've seen has been pretty elegant from the Treasury Department, that is really going after the illicit underbelly of the sort of overall lawful crypto ecosystem, to include a Buycash, which was a Gaza-based exchange, but similarly SueX and ChatX and Garantex and these other non-compliant VASPs in Russia that were allowing ransomware and other activity, darknet markets, mixers that were advertising on darknet markets like Helix and Bitcoin Fog. So there has been an effort to go after that illicit underbelly without necessarily affecting, with some exceptions, the overall sort of crypto ecosystem.
I see. Picking up on going after this activity, I did want to ask about seizing crypto wallets, because again, just in press reporting, it's indicating that wallets that were connected to Hamas, specifically that were seized by the Israelis, it was quite a bit of money that they received, roughly $41 million worth of assets over the past few years. But presumably these funds are now inaccessible to Hamas because they were seized. So, I mean, Ari, I would like your thoughts on like that number of 41 million, because that seems an awful lot. And then also, just as a former prosecutor, what does it mean to seize a crypto wallet?
Yeah, happy to go to both of those, and Dara, feel free to jump in. In terms of the 41 million, I think it's wrong. And as it gets quoted, it continues to still be wrong. The way sort of crypto wallets, when you're seizing a crypto wallet, they mostly belong to an exchange or a business, because those are the ones that are actually able to take that wallet and hand it over to the government, if you will. And those wallets often contain all kinds of different users' funds, to include illicit actors, but also lawful actors. And when you get to that 41 million, what you essentially do is you add up the funds in all of those different wallets that were seized by the Israeli authorities over the last couple of years or year or so. And you get to some pretty big numbers. But the reality is a very small amount of those funds are actually attributable directly to Hamas. And I think that's where a lot of these numbers got skewed. And sadly, those numbers now live in perpetuity because they're being used by policymakers. And I spend a fair amount of time trying to talk through what this really looks like and showing our tool and showing what we're actually seeing. In terms of seizing it, I think it's really interesting, and there's a lot of different pieces to this. People ask me, wow, are you guys seizing things? Like, we're a software company that's tracing transactions on blockchains. Law enforcement has tools to seize, to include traditional tools like search warrants and subpoenas and other types of process, civil seizure warrants, like we would anything, seize an oil tanker, you know, or a Cadillac Escalade, and you know, or a home. That, you know, they're essentially sort of using those same types of authorities. It just becomes a little bit more complicated when you're talking about the blockchain. So, you know, when you're hearing about an unhosted wallet or a self-hosted wallet seized, like in the Colonial Pipeline ransomware case or in the Bitfinex hack, law enforcement is either using very specialized tools that only they have access to, or they are getting those keys, the private keys, through a search warrant or other types of means. That's how we're seeing them seize those sort of the true, you know, millions or billions of dollars. Otherwise, it's blocked funds like OFAC would work with a financial institution in any situation to block a user's funds.
Dara, do you want to talk about Treasury's blocking authorities?
Sure, yeah. I mean, they are notably different from seizure, and it's important not to confuse the two. In terms of freezing or blocking, I'll give you the really technical OFAC definition, but it's really simply a way of controlling targeted property. So the title to the blocked property would remain with the target, but the exercise of powers and privileges normally associated with that ownership is prohibited without authorization from OFAC. So what blocking does is it immediately imposes an across-the-board prohibition against the transfers or dealings of any kind with that property. And so in practice, when frozen, actors cannot access funds. This can also be affected in technical ways, such as we're talking here about you know, cryptocurrencies. Actors can settle, access to funds are denied, and this can pertain to any provider of services that has the ability to stop transactions. For instance, the concept of blacklisting is a feature that's actually built into, not blocking, but blacklisting is just as a technical feature, is built into the Ethereum blockchain. And so if you're using a bridge that chooses to implement blacklisting, you would not be able to conduct blacklisted transactions. So that's not to say that OFAC, you know, OFAC has authorities, but there are separate technical means that are completely different from OFAC's authorities, where those who are who fall under OFAC's authorities, they can utilize those to implement those actions.
That's a really good point. And you know, and it also kind of gets to my next question, because we've talked a lot about what the U.S. has the authority to do, but presumably, you know, like there is likely arbitrage across jurisdictions. I was wondering, I mean, maybe Lesley, as a former attaché for Treasury, I mean, do you see a consistency across jurisdictions as it relates to these types of authorities, or are there differences?
There is quite a wide variation across jurisdictions. And what I would say from personal experience, I was a financial attaché in the Gulf. Even when there are authorities on the books, in practice and implementation, there can be challenges, right? And that could be due to bandwidth and capacity constraints on the part of law enforcement in that country, or a willingness issue. So I think it's very important to keep in mind, money is borderless, digital assets are borderless. You're only as strong as every other partner in the system. And unfortunately, right now, I think we see quite a patchwork, and there is some real vulnerability in the system.
And you know, going back to kind of the U.S. jurisdiction, because yeah, I agree. I mean, the consistency across jurisdictions is really difficult, as we're all trying to figure this out together too. But with digital assets, at least in the U.S., I mean, Dara, how are they truly regulated? And you know, are they subject to different AMLCFT controls? Is it different based on the type of currency or what chain it's on?
Sure. Yeah. So I can't speak for other financial regulators, as the financial sector falls under different regulators based on the types of services provided and what risks are being managed, such as safety and soundness. I will say federal regulators are often a floor and not a ceiling, as there are state regulators involved. But in terms of the legal framework for AMLCFT in the US, we have fairly good visibility provided by financial institutions, you know, under the Bank Secrecy Act. We're constantly assessing risks and working with our Treasury colleagues to act on those, providing material support to terrorist activities, as we started talking about terrorism. We don't advertise our capabilities, but we work collaboratively in this space across the US government and through public-private partnerships. FinCEN in particular has been at the forefront of regulation as it pertains to supervision of virtual asset service providers. We issued our first guidance on the matter in 2013, ensuring that VASPs in the US undergo compliance examinations, the same as other financial institutions do, and we've been performing those exams since 2014. And we took our first enforcement action in 2015. Earlier this month, I have to give a plug to our $3.4 billion settlement with Binance, which was the largest in US Treasury and FinCEN history. And we're happy to get into it in more detail as this conversation continues, and I think that it will. But in regards to regulation, we regulate the services provided and not particular entities. So that's important to understand, is that we take a technology neutral approach, and that it's about what services are being provided, and does that fall under what we're regulating in terms of money transmission services.
Just to put a really quick point on that, because it is so important. We talk all the time about the need for regulatory clarity and rules of the road in this space. This is the one place, and this is kind of why I love that I get to focus just mostly on illicit finance, is it is clear. This is not the Wild West, right? If you are a cryptocurrency business, and we'll put DeFi aside for a moment because I think we get a lot more complicated there. If you are a large exchange, if you're a broker, if you're a custodian, you are treated as any money service business for purposes of the Bank Secrecy Act, having those AML controls, which means you have to have robust compliance programs. You have to have policies and procedures, use tools like TRM for transaction monitoring, right? You have to have essentially a bank level AML program. It is very, very clear. I host a podcast, and a couple years ago, I said on there, I used the term unregulated VASP. And literally a former colleague who's not on this stage today, texted me live and said, don't ever use that term again. Every VASP is a regulated VASP. So now I use non-compliant VASP to describe that same thing. But it's such a point that I go back to all the time, because this is the one area, thankfully, that's actually pretty clear today. Once we move more into the more and more decentralized space, I think it becomes a lot less clear. But obviously, Treasury is doing a lot of work there as well.
Okay, and going back to the blockchain, and there's obviously certain attributes of the blockchain that really can support AMLCFT and help identify different illicit financial activity and enable enforcement actions. But it's just for the group, how does this actually work in practice? I know we've got the regulations, there's some reporting, but how does it really come together?
I'd say for us that in public blockchains, the transparency allows for tracing, and so we're able to do that. But it does, as we talked to figures before, in order to do that, it requires an understanding of attribution and knowing where the on-ramps are and off-ramps are. Once you have that understanding, that knowledge, you're able to use tools, a variety of tools that exist, to identify where records may exist that have high utility for investigators and investigations. And the goal, and what we're looking for in using those tools and doing all that work, is for leads, for investigators to be able to employ legal process to then get primary source documentation to then carry on as they would in any other traditional investigation.
Yeah, please go.
I was going to say, well, this conversation is about AMLCFT, and obviously there is a real value in having the real-time tracking and tracing capabilities on a public blockchain, but I think it's important to also step back and think about the greater good that you have by having better transparency, more accountability in public blockchains. And just as an example of that, on the Stellar network, Stellar Aid Assist is a program that was launched late last year in Ukraine, and it's a way that aid organizations and governments can send aid disbursements over a public blockchain directly to beneficiaries. It uses a US dollar stablecoin, goes right into a digital wallet that's on that beneficiary's phone. And it provides a lot of confidence to donors, right, so that they know where their funds are going. And when you look at contexts, post-war contexts like Ukraine soon, right, and dealing with reconstruction and recovery, being able to use a public blockchain and have accountability to where those funds are going, to be able to assist in auditing, is huge. So I think, while this is in the context of an AML-CFT conversation, I think we have to think broader about what the benefits of transparency and accountability are.
Yeah, and I couldn't agree more. I think something we struggle with as an industry and can do a lot better are articulating powerful use cases. And Lesley's use case right there, I think, is extraordinary. I point to anti-money laundering all the time, right? Like, we hear that it's a bug. It's really a feature of this technology, this ability for regulators to have a bird's eye view of their regulated ecosystem, right? You know, FinCEN and law enforcement agencies and OFAC and others are using tools like TRM to understand sort of, hey, what are the risks within my regulated ecosystem? And you can understand those risks in real time, right? In the traditional space, you're relying on siloed intermediaries, right? Banks, to provide SARs directly to FinCEN. In the crypto ecosystem, there's a world in which regulators can actually just sort of monitor and supervise their ecosystem in real time without having to worry about reports from intermediaries. So I think that there's a potential for a sea change in the way we even think about anti-money laundering. I think that's very hard to break through that wall, but I think we can do things better. And FinCEN they put out a request for information a year or so ago about modernization in terms of the BSA. And when we responded to that, we talked a lot about the potential for regulators to actually do this maybe without relying on intermediaries.
That's a great point. And we've talked about the open public blockchain and the transparency attributes, but then what about the attributes of digital assets that aim to enhance transaction privacy, like privacy coins or anonymity enhanced cryptocurrency, CVC mixtures? I mean, does that create challenges for blockchain tracing and AMLCFT compliance?
I'm happy to take a crack at that.
Take
Yeah,
that one?
look, I think the reality is I was a federal prosecutor for over a decade doing national security cases, and this is the cat and mouse game that has always gone on between law enforcement and illicit actors, right? The technology gets better and the obfuscation techniques then get better, and so on. Today, we trace through many mixers with a high degree of confidence. We trace in various anonymity enhanced coins. But sort of putting that aside, I think in a world in which we're going to do more and more transactions on open ledgers, people are going to need and have a right to more and more privacy, and are going to need tools to do that. And I think the challenge for regulators, and I'm grateful that people like Dara are doing this work and not me anymore, is how do we strike the balance between allowing lawful users a degree of privacy in their transactions in this new financial system while stopping illicit actors, North Korea, Hamas, others, from taking advantage of that. And I think that is the real challenge. But I think that the technology continues to get better when it comes to these obfuscation techniques.
I'd agree with everything Aries said, and also as a reminder, privacy and anonymity are not the same thing. So that's important to keep in mind. And with privacy, there are protections, but law enforcement regulators can get information when needed. So just an important point to underscore.
Yeah, that's a very good point. Anonymity is not privacy. So going back to FinCEN, because I'm not sure how much folks really know about FinCEN, and you've talked a little bit about how FinCEN regulates and monitors this space for suspicious activity. But I was wondering if you could go into, Dara, how FinCEN actually does work with law enforcement.
Sure.
And as well as different foreign partners on this illicit activity.
And I'm happy to get also into a little bit more about, how we, our role as a regulator of activity. So, as I said previously, dating back to our 2013 guidance, we don't regulate cryptocurrency or any specific coin. We regulate how it's being used. And our regulations focus on activities. So that means whether you're operating as a money transmitter, a broker-dealer, a futures, commission merchant, you will have obligations under the Bank Secrecy Act as a financial institution. So as I noted, we recently issued the largest civil money penalty in Treasury's history with the Binance action this month. We also have complementary authorities derived from the USA Patriot Act and the Anti-Money Laundering Act of 2020, among other laws. And what those do is they help us improve collection of information on potentially illicit transactions, or can even prohibit certain transactions under certain circumstances. So these tools, what they do is they deter non-compliance, and they also help maintain a level playing field for good actors. We leverage all of the available financial intelligence that we receive from the financial institutions under these authorities, including the financial institutions in the cryptocurrency and financial technology sector, to be able to identify, track, and analyze financial crime networks and identify emerging threats to support federal and foreign investigations. So we leverage the insights that are generated by our analysis and investigative work that we're doing from all of this information and data that we receive, as well as our partners with law enforcement, to support policymakers in assessing money laundering risks to financial institutions, products, or services, to support the financial system from abuse. I think what's important to note, and what folks might not know, is that as the Financial Intelligence Unit of the United States, FinCEN has used its role in the Egmont Group of Financial Intelligence Units, or FIUs, to show the value of appropriate supervision to achieve compliance and enhance financial intelligence. We've shown that compliant VASPs file SARs that help support regulatory and law enforcement investigations into the illicit use of virtual assets. We received 2,500 virtual asset related SAR filings a month, and through that, there's an understanding of how incredibly valuable that information is. Specifically, we work with law enforcement with this data through our participation in task forces, through our direct relationships with them and support to their investigations, and then also through our role as the FIU of the United States with our Egmont partners, which provides a framework for us to share certain information to support law enforcement cases. One of the benefits that we get from these interactions is understanding when a particular VASP or cryptocurrency exchange is cooperative or uncooperative over the course of an investigation, and that allows us to prioritize gaps in where they may exist, which gives us that virtuous cycle of regulation and law enforcement and getting after bad activity. We also have public-private partnership with industry via the FinCEN Exchange program, and really, truly, industry is on the front lines for bad activities. I really want to drive that point home. We value their unique insights on trends and patterns. They know what good activity looks like, and they know what bad activity looks like. And the idea really of all of this is if you see something, say something. And once the information is with us, which is what this framework is all about, we're able to work directly hand in hand with law enforcement to assist them on cases.
I think the public-private sector partnership is a huge piece of this, because as you said, industry is seeing this activity and knowing that they have a partner in the U.S. government in particular to be able to address it is key. You briefly mentioned some of the different actions FinCEN and the different authorities FinCEN has. I know it's been pretty active over the past few months, and most recently issued a 311 action under the U.S. Patriot Act, a notice of proposed rulemaking that specifically addressed a class of transactions. So it's the first time they've ever used this authority in this manner, and it specifically was to target CVC mixers. Can you tell us a little bit about what is a 311, and then how is it different from an OFAC, financial designation?
Sure. Yeah, I can speak, I can't speak specifically to this particular open rulemaking, but if folks want to comment, I encourage them to go onto the Federal Register to do so formally. I can elaborate if you'd like a little bit on that NPRM, what was posted about it. And so what it does is it identifies international convertible virtual currency mixing, or CVC mixing for short, as a class of transactions of primary money laundering concern. So the NPRM that we've mentioned, it highlights risks posed by the extensive use of CVC mixers by a variety of illicit actors throughout the world, and proposes a rule to increase transparency around CVC mixing to combat its malicious use by actors including Hamas, Palestinian Islamic Jihad, and DPRK. And it's part of our efforts at Treasury to promote transparency of CVC mixing activities. In terms of the differences, OFAC's authorities are derived from the International Emergency Economic Powers Act, IEPA, and they largely pertain to property. Now, under Section 311 of the USA Patriot Act, which FinCEN is able to use, FinCEN may determine reasonable grounds for concluding that one or more classes of transactions within or involving a jurisdiction outside of the United States is a primary money laundering concern. And then once you have that finding of a class of transactions as a primary money laundering concern, the Secretary of the Treasury may require certain covered financial institutions to take more special measures. And what's interesting about these is that they're called special measures, and what they really are a specific menu of options that can be chosen as associated with any particular 311 action. And there's a versatile menu. They can include targeting specific information for collection or just beyond just blocking certain transactions, which they can also do. But there's a variety of options according to that menu that can be employed.
No, thank you, because I think that there's, I mean, and even before I went to FinCEN, I didn't truly understand the power of a 311 or what it really entailed, and just the distinction between what a 311 action and identifying an institution, class transactions, jurisdiction, a primary money laundering concern is very different than an OFAC designation. And then even the fact that it is a regulatory action, so you can't reverse it so quick. Whereas an OFAC designation, if the national security environment has changed, you can take those designations down.
Just commenting really quickly on the content, I think one of the really cool things, as many of you in the audience know, about not being in the government anymore is you can say whatever you want within reason. So I'll comment directly on the NPR. I think, look, what it does is requires a heightened reporting requirements for U.S. financial institutions on these mixing transactions that go through sort of mixers, which are obfuscating the flow of funds. I think ultimately, as I said a moment ago, regulators really need to figure out how do we allow lawful users to enable privacy on blockchains, on public blockchains, and at the same time stop lawful users. And I think in the past, they've gone after the mixers that have been used at scale by illicit actors like North Korea, Tornado Cash, for example. And I think the key here is reporting requirements are one thing. The hope is that financial institutions just won't entirely de-risk this entire set of transactions. And I think there's this other question as you read it, and I really encourage you to do, because I think it's really, you learn a lot about the space, and honestly, like the expertise that Treasury has on these issues is pretty phenomenal. But then it's like, who's responsible for these enhanced requirements and for what types of transactions? So there's a lot of sort of open questions, and I think it'll be interesting to see how it plays out. But you're going to get a lot of responses.
I am sure, a lot of folks in this room. And you did mention too just Egmont and the value of information sharing with international partners, which I think is always a critical piece just from AMLCFT and addressing illicit finance, especially because of the jurisdictional arbitrage issues that we discussed before. And I know FinCEN recently put out a press release about a new task force that has been stood up to address counter-terrorist financing. Is there anything more you can say about that? I mean, they just kind of published it on Monday and left it hanging.
I don't know. I mean, I would direct folks to the website to certainly look at the press release, but it is about countering terrorist activity and stood up around what's been going on in the Middle East at present. I would say that we have this model. The model I think was created around our efforts targeting Russia's invasion of Ukraine. There was a similar task force that was set up, and a press release also went out in March 2022. So through the Egmont group of FIUs across the world, we have these established partnerships. There's already a group and just relationships, channels, infrastructure that exists. And so when things happen, we're able to leverage those existing relationships, existing partnerships in certain circumstances to come together. And I think that what came out on Monday is just the most recent example of a grouping that's leveraging those existing partnerships.
That's great. No, it should be a good effort, and it's nice to see more publication and kind of transparency on how we work with different foreign partners. I feel like I have to raise this because it just happened last week, but Binance, the largest crypto exchange in the world that pled guilty to federal charges on violations related to the Bank Secrecy Act, and also in the fine, the largest fine of almost $4 billion that you mentioned, Dara. I was wondering, I mean, is there anything more that you can share with us? I know it's an open case, you can't go down too many roads, but recognizing that, I mean, this was likely a large interagency effort, and should we expect to see more types of actions like this from DOJ and Treasury going forward?
Yeah, I mean, so much of our work is really truly a whole of government effort. You'll see lots of organizations, as press releases come out, so many folks are working together on certain actions. such as Binance. I think what it highlights is that we remain vigilant, and we remain vigilant. These, authorities exist in order to protect the financial system from abuse and maintain transparency. And I can't really comment on specific future actions, but there are a large number of actions previously that FinCEN has taken, that the Department of Justice has taken, that OFAC has taken, and we at FinCEN, we're constantly monitoring. We remain vigilant, and we're ready to act when appropriate.
Ari, do you have anything that you want to say?
What's Binance?
Good answer.
No, I think that, look, I think it's a very much we'll see, right? I mean, now we're going to see what I am hopeful will be the best-in-class compliance program, that's ever been created, certainly in the crypto space. And we've seen financial institutions pay large fines and move forward, and I'm hoping this will be, that will happen here in the crypto space as well. But yeah, no, an impressive whole of government approach, and yeah, I think it'll be very interesting to see what comes next.
Yeah. We're running a little short on time, and I still have so many questions for you all. Thank you for being here. I did want to raise the action plan that Treasury issued last year. I know Lesley raised it earlier in the conversation, but it was an action plan to address illicit financing risks of digital assets. And I'm going to read this verbatim because I don't want to mess it up. But in the plan, Treasury notes that the primary illicit financing risks associated with virtual assets come from gaps in implementation of the international AMLCFT standards across countries, the use of anonymity-enhancing technologies, the lack of covered financial institutions as intermediaries, and thus the absence of AMLCFT controls in some virtual asset transactions, and FASTs that are non-compliant with AMLCFT and other regulatory obligations. And in this plan, they also include several different priority actions that the U.S. government's going to take to address these risks. So, Dara, just as kind of the government representative on the panel, yeah. How has the U.S. made progress on these actions, and what are some of the priorities in addressing these risks and gaps?
Sure. So, we remain vigilant across activities, which is in line with the goals of this strategy. So with respect to threats and what we focus on and our priorities, they're driven by where we think the greatest risk lies. And those include fraud, cybercrime, counterproliferation, and terrorism. And we're very focused on those areas. Our passports are valid, and we work closely with our domestic and international partners on capacity building. And that includes everything from technical assistance to regulatory assistance. So we're incredibly active in that space across the globe to move the needle on that front in targeting jurisdictional arbitrage. We support capacity building across a wide array of partners, and we prioritize that activity based on what we see as the size of those gaps.
Great, and then we only have a minute or so left, but Ari, Lesley, from the industry perspective, is the U.S. government making progress, and where should they really be focusing?
I would say first, Treasury deserves a lot of credit for putting together that action plan. It's very thoughtful, it's very forward-leaning. I think the challenge is it's very aspirational, and I think it will be hard to implement, particularly on 2 points. One is on the VASPs in jurisdictions abroad that have very significant AML-CFT deficiencies, right? I think that is going to be a longer-term project to build capacity in those countries. It's going to take leveraging FATF. It's going to take working with like-minded partners. And from working with capacity building in the past, it's also a huge burden really on the U.S. government in terms of personnel resources, funding it. So it's just something to keep in mind that that's a longer-term project. Also on the action plan, there's a lot of focus on building up internal USG capacity on digital assets, which is great. And it's aimed at law enforcement, it's aimed at regulators, and also policymakers working in the digital asset space. But the challenge is that there are ethics rules in place that prevent some policymakers that work on digital assets from actually engaging with the technology themselves. So I totally agree with the action plan. I think it'll be difficult to implement when there are restrictions like that still in place.
And Ari,
really well said. I feel like Steph Curry. The shot clock is literally going down. Trying to get this off. Look, I also think there are things the industry can do alone, right, without government. And I try to focus a lot of my time there. We run a website called Chain Abuse, which I'd encourage you guys to just check out on your phone. It's totally open to everyone. It's a way to report scams and fraud, and also a way to sort of crowdsource to make sure that, if you're a victim, other folks are not victims, to report to law enforcement through this app. There are things that we can do, and there's a lot more of these types of efforts out there. There are things that we can do as an industry to kind of really, I think, take back some of the narrative around fraud and scams and illicit finance in the space.
Great, and we'll end on that. Thank you all for joining us today. This was a great conversation.
Thanks,
I appreciate
Kim.
your
Thanks,
insights.
Kim.
Thanks, guys. Yep, thank you.